Hello guys, good morning. You are welcome back to today's session. I hope you can hear me clearly. Please, if you can hear me clearly, drop it in the comments and let me know that you can hear me clearly. Let me know that you can hear me clearly, guys. Good morning, good morning. Alright, you're absolutely welcome to today's live session. And if you're new to this live session, do not forget to click on the subscribe button. And what we do on this live session is that we come and then we make analysis on different assets and see what we're looking out for the new week. Okay, so if you want us to make analysis on any assets, drop it in the comments, and then I'm going to pick 2 to 3 assets from the comments and make analysis on them. So I'm going to be getting started with the first one that I am currently on the outlook for, and I'm going to pick right from the group. I'm going to pick right from the group when you guys drop the assets you want us to make analysis on. So let's get started with the first one. So let's get started with volatility 101S. That is what I am currently on the outlook for, and we're going to get started on the 24 hours time frame. Let's get started on the 24 hours time frame. Alright, we don't have access to weekly time frame, so we're going to make do with the 24 hours time frame that we have currently. But if you check on the weekly time frame for volatility 101S, market is approaching a particular high that we are expecting it to come back and break anytime soon. So based on this 24 hours time frame, it is very obvious that the last break of structure we had was this high. We had the last break of structure here. However, until market breaks the external, we are not expecting all these lows to be taken. So we'll mark our last break of structure based on the range we currently have. So I'm going to be marking out this high as the last break of structure for volatility 101S. I'll be marking out this high because this is a range structure, and until market comes back to break this low, we don't have any view of market getting back into this zone. So I'm going to mark it based on what we currently have and the range we are currently trading on. So this is our last break of structure to the upside, and this is the low we are not expecting market to come back to break anytime soon, which automatically means that we are trading in between this low and this high. That is the range we are currently trading in. So we're going to look for our buy continuation inside that range. So I'm going to be going to 4 hours time frame, and then I'm going to be looking out for possible areas where markets would come back to and make that continuation to the upside. So based on this internal, we have fair value gap here that market is likely to come back into. This is a fair value gap. However, we will still mark out our last break of structure internally. So where is our last break of structure internally? This is it here. We're going to check on 2 hours time frame, and you're going to see why we marked that out as our last internal structure break. This is a fair value gap, and until market comes back to break this low, we are not sure of market coming back to this fair value gap. So we'll work based on the range market is displaying to us right now, and we're going to fix our mind on the probability that until market comes back to break this low, this fair value gap will not be filled. So I have my last break of structure internally here, and I am expecting that I am expecting that market would use this area for a buy continuation if we want to continue that, or if we do not have a continuation from here, because we are definitely expecting market to give us that entry confirmation when it gets to this zone, right? We're expecting an entry confirmation when it gets to this zone. But if we don't have that entry confirmation, the next thing we're going to be waiting for is for market to break this low, and after breaking this low, we're expecting it inside this fair value gap. And once it gets into this fair value gap, I'm looking out for this point of interest. So that is why I'm going to be marking out 2 points of interest, because market has not displayed any fact yet that it is going to break this low. So until this low is broken, I'm not going to be looking out for this second point of interest. So I have 2 points of interest for volatility 101S here, and I'm waiting for entry confirmation at the first one. If the first one does not give us that entry confirmation, I'm going to be looking for the entry confirmation on the second one. And you might be asking, what entry confirmation are we looking for? So I just want to see this on 15 minutes or 30 minutes time frame. Just market give me a change of character to the upside, and then I'm going to wait for that little retracement and continue that buy movement until this high is taken out. Keep dropping the assets you want us to make analysis on in the comment section, and we're going to pick one or two from the comment section. So this is my current view on volatility 101S. So let's go to the second one, which is volatility 10. So volatility 10, what are we expecting on volatility 10? Let's delete all of this. On volatility 10, our last break of structure was definitely to the upside, to the downside. I'm going to go back to 24 hours time frame right now. Our last break of structure is to the downside, and based on this 24 hours time frame, I'm already seeing my fair value gap that is likely to draw back this move to the upside. So this is the fair value gap here. This is that fair value gap. So I'm marking out this point of interest as an area of interest because we have fair value gap there, and our last break of structure was to the downside. And as you can see, we had a whole lot of liquidity displaying around this area. So I am expecting market to come back and break all of them and come back into this fair value gap, give us an entry confirmation at this point of interest before making that continuation to the downside. So if we check the 4 hours time frame, how can we join the current market? So just like I said, where market is reacting currently is not a good area for me. You can see this is not a good area for me. A lot of people would mark this out as a change of character, but no, that's not a change of character for me. Inside this movement to the upside, you can see our last break of structure was in fact to the upside. We had this last break of structure to the upside, and we had fair value gap inside that zone that we are expecting market to come back to fill. And you can see that we already came back to test that fair value gap. So what I'm expecting right now is a confirmation. I'm waiting for market to give me a confirmation inside this fair value gap, and then I'm going to look for that buy continuation until market gets to that point of interest. So I'm expecting this high to be taken. When market comes back and take this high, this is 30 minutes time frame, I'm expecting that high to be taken, and then I join with that little retracement and I continue to the upside until market comes back to break this particular high. This particular high is going to be the liquidity market is coming back to seek after, right? So this is our fair value gap, and we're expecting a continuation until market comes back to our point of interest. So I'm looking for more of a buy setup after market gives us a change of character to the upside. So let's look at volatility 75. Let's look at volatility 75. 24 hours time frame. So where is our last break of structure on this 24 hours time frame? This is our last break of structure. A break of structure to the downside, a fair value gap that is likely to draw back the market, and it is extremely big, so it is likely to in fact draw back this movement to the upside. So I'm going to go to 4 hours time frame. So this is my first point of interest because it's an interest candle here. This is my first point of interest, and this is my second point of interest for this sell continuation. And as you can see, market is yet to give us that break of structure to the upside. So right now I'm currently not going to be looking for a buy setup. If market breaks this particular high and it gives a retracement, then you can make a buy continuation until market comes back to this point of interest. This point of interest is an interest candle, and I'm big on it. I'm waiting for market to come back here and give us that massive reaction to the downside. But if you want to continue the buy setup, or you want to just trade retracement, wait for market to break this high. After it has been broken, wait for little retracement, join in the buy continuation. Your target should be on this high. Your target should be market taking this high. And once we get back to this interest candle, you just look out for your entry confirmation and you join for the sell. So let us do one last one, which is volatility 51s. Let's do one more, volatility 51s. So 24 hours time frame. What's 24 hours time frame saying? We have our last break of structure to the downside. Look at it here. A break of structure to the downside. Now where's our last internal structure break? Our last internal structure break is here. This low is our last internal structure break. This is our last internal structure break. So what are we expecting? This is a PO high for me apparently. This is a point of interest for me. So what am I expecting on volatility 51s? 4 hours time frame. Okay, I'm expecting it to break this high. I expect it to go above this high because this is liquidity. So I'm expecting it inside this PO high. However, once market goes above that high, where is going to be our entry confirmation? When market comes back to break this low, this is a total change of structure that we want to continue to the downside. Once market breaks this minor low, that is a confirmation for me that we are about to continue to the downside until this low is taken. So take note of that. But currently, with this movement of the market, I'm neither going to look for a sell or look for a buy because we are closer to the point of interest. If you're looking for a buy continuation, market can choose to just continue the sell from here based on the fact that we are closer to the point of interest. And if you're looking for a sell continuation, market has not given us a change of character yet, which is this low. So until market gives us a change of character, that is when we're going to be sure that we want to continue that sell movement to the downside. Do you understand? So that is exactly what we're looking out for on volatility 51s. If you have any question ask in the comment section, and we're going to treat the questions. So somebody say anything like liquidities in synthetic. I thought it doesn't follow world actions like big news and algorithm. Okay. Now there is liquidity in the synthetic markets. You can see it everywhere. And the definition of synthetics is that it mimics the real world currencies, it mimics the real world events, it mimics all those assets. When we say something mimics them, it means it carries every other things that comes with the real world market: liquidity, market structure. In fact, if you check the market, you would always find liquidity in the market. You would always find inducement. Just the way you are trading your currency pairs is the way synthetic market also moves. The only difference is that this is not the real world market. It is moved by algorithm. However, it has been positioned to move just exactly how the real world markets move. I hope I've been able to answer your question. If you have any question, drop it in the comments and let us take question before we call it a week. I'm waiting for your questions, guys. All right, somebody said, how do you determine your bias for your long-term direction? Okay, my bias is determined for long-term direction if I make my analysis on the higher time frame and I am saying that market is back to the point of interest of the higher time frame. Now, once we're back to the point of interest on the higher time frame, it means that market is going to move for a very long time, right from that point of interest marked out on the higher time frame. You cannot mark out a point of interest on lower time frame and you expect that market is going to move for a very long time, because the liquidity, the structure on lower time frame might be the liquidity on the higher time frame. So for you to determine your bias for long term, you definitely have to work based on the higher time frame direction, the higher time frame point of interest, the higher time frame liquidity. Everything has to be right from the higher time frame, and all you just have to do is go to lower time frame to get that confirmation, and then you continue that move to the upside or to the downside. So for instance, if I want to look out for my long-term bias on volatility 51s on the 24 hours time frame, I'm going to mark out my PO high. This is a PO high on the 24 hours time frame. So if I expect market to come back to this point of interest, I'm definitely going to get my change of character on 2 hours, 4 hours time frame. And when that change of character happens, this sell is going to be for a very long term, right? It is going to come back and take this low to create us a new lower low. So that is how you determine your long-term movements. Okay, you mean we should wait for price to hit the point of interest, then break the structure bearish? Now for this volatility 51s, what I am saying is that wait for market to come back to this point of interest, or wait for market to give you a change of character to the downside. The reason we cannot look for a buy continuation right now is because we are closer to the point of interest, right? Market is closer to the point of interest. So you cannot say if market is going to use where it is currently to continue that movement. So all you just have to wait for is, it's either market gives you a break of structure to the downside, or we hit this point of interest and it gives you that minor change of character on 2 hours or 30 minutes time frame. Do you understand? Is it derivative trading view you are using? Yes, it is. What is QM entry? QM entry is Quasimodo entry. I can't be explaining that on this session, right? But Quasimodo entry is as breakout structure. Look out for the demand as breakout structure. Look out for the demand and supply zone. So if I want to get my demand and supply, mark it this way, and this is it. So this is my premium zone. This is the premium level. So I'm going to mark out my supply zone from here, from this premium level that we have here. So you definitely should use fib to determine your premium or supply zone, your demand or supply zone rather. So you definitely have to use fib. Do we have any other questions? Somebody say you're freezing. Is it the network? Can you hear me correctly right now? Do you think synthetic respects chart patterns? Yes, it does. Synthetic respects chart patterns. Synthetic respects chart patterns. Okay, do we have any other question from anybody before we call it a day? Do we have any other question? Please, what is QM, MS, and R? I made mention of QM already. I said those are Quasimodo level, marking out a point of interest right from where market has manipulated before and using it as your point of interest. Then MS and R is support and resistance. Is there a reason why you chose to mark that high and low using your fib? The reason I marked it out is because that is my last break of structure. This was where I had my last break of structure. You see what happened there is not really a break of structure for me, based on the fact that this movement to the upside is a shallow corrective wave for me, meaning it is just a simple corrective wave. It did not come back to do a deep corrective wave. We did not come back to the main point of interest. So the break that we have here is not really a break for me. So this was where I had the last break of structure. And if you notice how I marked out this last break of structure, you can see that we had a very good retracement with this level. Market gave us a very good retracement here. Unlike this place, we just used an area to continue to the downside. But here, we used our normal point of interest to proceed to the downside. So even if I want to mark out market changing structure to the upside, it has to be this high, not this high. Do you understand? It has to be this particular high. So this was where I had my last break of structure, and that is where I am currently sticking to, and that is why I used my fib in marking out that particular area based on my last break of structure to determine my premium level. Do you understand? So somebody said for the fib you didn't really get the answer. I said you can use your fib in marking out areas for your supply or demand zone, and you have to use it based on structure. This is the last break of structure. I'll pick out my fib, draw it right from where we had the last break of structure to that high, to the highest high of that particular range. So it automatically means this green level is my premium zone, and that is where I am going to be marking out my supply zone. Do you understand? That is where I'm going to be marking out my, using a fib is very essential. Yeah, let me put it that way, because it helps you demand premium zones. Do you understand? Is there a reason? Okay. What's your advice trading off lower time frame on synthetic or higher time frame? I am constantly saying it, that when you want to mark out anything in the market, start from the higher time frame. Even if you are a scalper, start from the higher time frame. The higher time frame is going to help you a whole lot than lower time frame. Lower time frame has a whole lot of noise on it. Now, if I go on weekly time frame right now, you will find out that this break of structure that I marked is the real break of structure on the weekly time frame. But if you check lower time frame, you're going to get confused a whole lot. So even if you are a scalper, I would advise that you start your marking out on the higher time frame. Don't just start from the lower time frame, because lower time frame can be deceptive. Do you understand? I hope I answered that. Price sometimes doesn't respect fib levels. What can you do? Price sometimes don't respect fibs level. What can you do? Now, the most important thing that you have to mark out before using your fib is recognizing where your last break of structure really is. Now, if I mark out this low, if you check on the 2 hours time frame, this is definitely going to be your last break of structure, right? If I mark out this last break of structure and I use my fib, see, your fib is not something you just mark out and then you just determine that I'm going to use this area for continuation. You have to get your liquidity, you have to get the perfect point of interest before. Fib is not a prerequisite for you to enter the market immediately. Fib is just for you to recognize, where do we have premium zones, where do we have our supply, where do we have our demand. That is exactly what fib is. There are a lot of things surrounding how you make your analysis and how you pick your entry, and one of it is market structure, liquidity, point of interest, and then you get your entry confirmation. So I can't just use my fib in marking out my range right now and I just decide that I'm going to continue my sell setup right from here. No, it has to give me other prerequisites also. So you don't just use your fib blindly. You only use it in marking out essential areas where you can mark out your point of interest, you can mark out your supply, or you can mark out your demand. Do you understand? We are done with analysis. Somebody saying BTC, we're done with analysis. Did you ever question yourself when you started trading if you were on the right path? I did that a whole lot of times. I questioned myself. I doubted myself. I wanted to give up. Yeah. But yeah, something just kept me moving, right? So you question yourself, even if you are in another business, if it is not working out yet, you will question if this is ever meant for you. You will definitely question it. So it's just about your determination on what exactly you want to do. How are you able to attain profitability? A whole lot of failure. Yeah, many people run away from failure. You cannot be profitable if you don't know what failure is. You cannot be profitable if you don't embrace failure. If you don't sit yourself down and ask yourself that, is this what I really want? You cannot attain it. So you have to embrace failure. And also another thing I would want you to take note of is that if you are a trader and you truly want to be profitable, you can't be normal. You cannot be like the normal people. You have to be more disciplined than the normal person. You have to be more patient than the normal person, than the average person doing any other business. I can be doing clothing business and I'm not going to work so much on my discipline. I can be doing marketing and I'm not just going to work so much on my discipline. But as a trader, your own has to be extremely more than the average person, than the normal. You have to be abnormal. During your learning phase, how were you able to master the charts? Were you very hooked up on back test and forward test, or just forward testing? Back test helped me, forward test helped me. Both actually helped me so much. And I can remember in 2021, 2022, I was doing 8 hours chart intimacy, like 8 hours per day on studying the charts. I would look at what has happened before. I would look at what is currently happening. I'm going to use the previous information that I have about the previous moves of the market, and I will use it in making my analysis right now. Do you understand? So you have to work with both your back test, your forward test. You definitely have to work with both. Anything like slippage, do you still journal, or can you share with us what a valid trading plan is or looks like? Now, I made mention, I said I was going to make a video on this journaling. For my first 3 years of trading, I didn't journal. Let's put it that way. Because I was not consistent with it. Not that I did not know that that is what I am expected to do. But when you have in your head the normal way a journal should look like, you already have it in your head that this is how a journal should look like. Are you sure I can be consistent with it? A lot of people do not know that journaling is personal to you, and you have to do it in such a way that it is convenient for you. Personally, how I journal right now is that I have a group on Telegram, personal to me, just myself in the group. And what I do is I mark out my charts, I send it there. I mark out anything I'm confused about, I send it there. I mark out anything I observe in the market, I send it there. Now, many people think journaling is about you having a book and writing down, this is what I see in the market. Do you know that writing down is not as effective as having a group where you can put a picture? You have a pictorial representation of exactly what you're talking about. But many people think it is about writing. I was not okay today when I placed this trade. This is what happened today and all of that. Many people think that is what journaling should be about. But when I found my own unique path to journaling, I have been consistent with it. When I see anything in the market, of course, it is just me in the group. There is nobody in the group. So even if I say the craziest thing, I am the one that will also see it for myself. So I will just make a screenshot, send it to the group, say what is in my head, say everything that I am observing about the market, and that is it. And the next time I come there to check it, I can be able to relate with exactly what I said, right? So I was just back testing now. I only see the setup once it has already played out and I'm unable to get it before it does. What would you advise? There are a whole lot of opportunities in the market. So even if one already plays out, if you see that same setup, you can be able to replicate it on another market, on another asset, or another move that market is going to do. All you just have to do is know exactly what you're looking out for and be consistent with it. Master a particular entry move. Master just one particular entry model. Yeah, that's the word. Master just one particular entry model and use it consistently on different assets. How many months did you use for forward testing before funding your live account? Let me tell you the truth. I am not really a fan of demo testing because I feel that all the emotions you are going to have during live account or during trading your live account, you're not going to have it when you are demo testing. Because demo testing is just telling you this is not my real money, I can do it anyhow. So I had always deposited. Only when I just want to back test a new strategy is when I use demo. But for me to forward test, I had always been using my live accounts. And many people will not be able to do this. Let me tell you, many people will not be able to do this because if you don't have the money to constantly fund, if you don't have the money to constantly use for your back testing, you get frustrated and just feel trading does not work for you. So if you don't have that money, I'm not saying that you should not demo test. You can sit down with demo, test with it, forward test with it before you go to your live account. But if you have another source of income, there is no harm in trying on your live accounts, because it is going to give you more experience. It is going to give you more experience than what demo is going to give you. If you succeed, fine. If you don't, you learn. But many people, if they don't succeed, they feel they are the failure, which is absolutely out of it. Okay. Did you fund your account with little amounts? If yes, how did you scale up? Yeah, I funded my account with little amounts. You see, $20, $50, $100. Those were the things I always fund back then to test everything I am seeing in the market. I always fund very little amount, and I made a video about it on my Instagram. If you cannot do small numbers, you won't be able to do big numbers. If you cannot trade 50 to 300 to 400, then you will not be able to do 1,000 to 5,000. So the way you scale up is this, right? If you fund a small account, you fund $50. If you are unable to take it to $200, then you need to look at what you're getting wrong with your strategy. If you cannot be able to fund $100 and trade it to $500, you will not be able to trade big numbers. So the way you just scale up is fund small number, challenge yourself to do it to a particular amount. Once you do it to that particular amount, pay yourself, and out of what you funded there, or out of what you've traded, fund again. So let's take for instance, if I trade my $50 to $400, I'll pay myself. I'm going to withdraw the money I initially funded. I'm going to withdraw, let's say $100, which means the $50 that I funded and $50 to pay myself. I'm going to leave the remaining $300 there, and I'm going to challenge myself to do that 300 to 1,000. Do you understand? So it just takes you to be disciplined and know exactly what you're doing. If I trade that 300 to 1,000, I'm going to withdraw my 300. I'm going to leave the 700. Or I withdraw 500 and leave 500, and challenge myself to do that 500 again to 1,000. And sometimes it is not this easy as I'm saying it. Sometimes you will blow that account. You will blow it. So what you just have to do is fund with little amount of money. And also I spoke about leverage. Fund with little amount of money. Once you are able to do that small numbers, it is, in fact, you are likely to do a lot of big numbers. If I can trade $100 to $400, in my head I'm always like, this is exactly how I would have traded 1,000 to 4,000. If I trade 50 to 500, in my head I would be like, this is how I would have traded $500 to $5,000. So the way you scale up is very easy. Just fund with little amount of money. Challenge yourself to do big amounts, or challenge yourself to do it to a particular amount. Once you do it to that particular amount, pay yourself, withdraw the money you funded, which means that account is now risk-free. Trade it from where you funded, or trade it from that amount. Challenge yourself to trade it to a particular amount, and that is how you keep scaling up, right? So that is it. So we don't have any other question here. Thank you so much, guys, for joining today's live session. Today we really did more of question and answer than we did analysis, which is still a good thing. I'm going to see you guys on Saturday by 9 a.m. again.